Hey guys, Taylor with GammaEdge here coming at you with another education piece. This time we're going to be talking about our intraday volume analysis and how that will benefit SPX 0DT traders, intraday futures scalpers, etc. Quick note to the reader before we get going. When we say options volume throughout this lesson, unless otherwise stated, we're referring to SPX 0DT options, which is where 46% of total SPX volume concentrates on any given day. So with that, have you ever wondered why some trading days exhibit smooth directional price action while others trap you in frustrating back and forth chop? What if we told you the answer isn't found solely on a price chart, but rather hidden in the flow of options volume throughout the session? Let us explain. By analyzing 0DT options volume, you can unlock intraday sentiment in real time. More specifically, measuring how call and put speculators are transacting throughout the trading session can reveal three key advantages for your trading. One, the character of price action, which is choppy versus trending. Two, the projected price path of price through the end of the trading session. And three, key levels where reversals are likely to recur or fail. The best part for you is that we've built specific tools to analyze and, more importantly, make actionable this intraday volume. While many traders rely on price-based indicators that lag market reality, our intraday volume analysis tools let you see what's happening under the hood of the market right now, allowing you to adjust your strategy as conditions change. For example, when call speculators target progressively higher strikes throughout the session, that is a signature of a trending higher day. However, when call speculation is trending lower, while put speculation is trending higher, this likely results in range-bound action. As for the remainder of this lesson, we hold nothing back as we walk through our entire intraday volume toolkit. You'll see exactly how to track the momentum of call and put speculation in real time to identify trending versus choppy days. Use the distribution of call and put speculation over time to anticipate likely price paths. Identify where price reversals are likely to stick, and ultimately make more confident decisions when to be aggressive and when to be patient. By the end, you have a concrete toolkit to implement in your very next trading session, giving you a significant edge when trading SPX 0DT or intraday future scalping. So with that, ready to see what the options market is really telling you? If so, let's keep going. Let's dive in. As a bit of background, as we started down the path of volume analysis, we naturally began at a higher level and then got more granular as our understanding increased because, we didn't know what we didn't know. This led us to develop our first tool, which is called Vol-U. That's simply just a Discord command that you can type in the command line. Specifically, the volume command measures option volume for the current trading session by strike, by expiration. So think of this as a snapshot of where all option activity is transacting across the entire options chain. To use this command, simply type vol-u SPX as an example in the Discord command line. This produces a visualization as shown below, showing call and put volume distribution across all strikes and expirations. So quickly, how to read this chart. Again, this chart is dynamic, so you're able to select what expirations you want to see on the right-hand side. And again, this populates throughout the trading session as volume comes into the market, obviously. And so this is from September 6, 2024 as an example. And this is showing us, using the legend over here, we have selected the first four near-term expirations. So the blue, that is going to be all of your 0DT options. And then, red is 1DT, green is 2DTE, purple is 3DT, right? What you can also do is you can select single expirations and just see that volume as well. So again, just quickly up in this left-hand quadrant this year in the money call volume, bottom left, that's out of money put volume, bottom right in the money put volume, top right, out of money call volume. And then above the zero line, this is all your call. Oh, well, I just inherently went to that. Then below, this is all your puts. And so getting to the practical application, because that's what matters most. While Vol-U gives us a comprehensive view of all options activity across strikes and expirations, what it's really good at is it's providing us with key levels of reference. So understanding which strikes are attracting volume and whether this focus is shifting higher or lower as the session progresses. So right, just going back to this example, we can see there's some pretty key strikes or goalposts, as we like to call them, developing. So what's important to see if those strikes continue to develop throughout the session or not, or if new ones start to develop. Then it also gives us insights in the time horizons, meaning, do we see significant volume existing beyond the 0DT expiration, which potentially helps us to distinguish if this is really just a one-day move or if it potentially has legs for a larger trend. As a starting point each morning, we use the web app dashboard for understanding key levels derived from the SPX options market. However, once the opening bell rings, volume becomes essential for tracking where intraday volume is flowing in real time. For example, if you see price moving higher during the session and simultaneously observe increasing out-of-money call volume at strikes above current spot price, this confirms bullish sentiment and suggests further upside potential. As the session progresses, large volume concentrations at specific strikes often act as normal goalposts for where price might gravitate towards by session end. Pay special attention to activity beyond 0DT. Significant volume and further data expirations often indicate market participants expecting the current move to continue. While on the flip side, volume concentrated solely in 0DT usually signals a one-day phenomenon. This forward-looking perspective is critical. We always emphasize skating to where the puck is going, not where the puck is. While analyzing the volume output, we realized that a significant amount of SPX was transacting in the 0DT contract. This concentration meant we needed to develop more sophisticated tools to understand this specific contract expiration for intraday trading. With that thought in mind, this led us to developing the next command, which is called vol-D, which stands for volume differential. So in short, vol-D displays volume for the 0DT contract specifically in 5-minute slices throughout the trading session, offers two key pieces of information. What strikes are attracting volume during the specific period of the session, and how that volume changes over time as market sentiment evolves. So right, said another way, what we do is on a 5-minute basis, we aggregate the call and the put volume, and we plot that, and we plot each 5-minute segment throughout the session. So again, this chart is dynamic. For the 0DT contract, you have all 5-minute slices, so you can understand how that, not only how that volume is shifting on a 5-minute basis throughout the session, but if it's growing or shrinking. So again, right, each of these colors represents a 5-minute time period. The bottommost one is the open, and then as you progress higher, that's later and later into the session. So key features of this, right, it's 0DT focused exclusively. Time slice comparison, again, you can compare, 5 minutes over 5 minutes over 5 minutes throughout the session. Right, this is an interactive chart, so you can cycle through the trading day to understand what's happening. And then it's pretty granular analysis, meaning you can pinpoint exactly where significant volume begins, targeting specific strikes. Now getting on to practical application. This command can transform your 0DT trading, intraday future scalping by revealing trend identification, right? We can spot emerging trends in options activity, which we found that price generally follows. So it's speculation moving higher, is it moving lower, or unchanged throughout the session. Kind of in a similar light, volume shift analysis, identify where traders begin targeting different strikes, often preceding price movement. Key level formation, watch in real time as certain strikes gain importance through their accumulated volume. And then intraday reversals, detect when volume patterns change direction, suggesting potential price reversals. So what that simply means is, are we seeing call volume throughout the session, and then, around lunchtime, put volume really starts to call volume kind of wanes. What traders quickly notice when using vol-D is that certain price patterns emerge in how call and put volume shifts throughout the session. On trending days, volume consistently targets strikes in the direction of the trend. On choppy day, volume oscillates between calls and puts, without seeing a meaningful expansion higher or lower. Right, and this observation led us to our most powerful tool yet, which is vol-M, which takes the data from vol-D and transforms it into a visualization that instantly reveals the character of the trading day and where price could likely be headed. Right, and so just recapping that thought, after developing vol-D to track 0DT volume in 5-minute slices, we realized we needed a more intuitive way to visualize how call and put sentiment shifted throughout the session. So again, this led us to vol M, which stands for volume momentum. Again, this takes the raw volume data from vol D and transforms it into a visualization that reveals the character of the trading day, which gets us to this visualization down here. This is vol M. And specifically, vol M tracks two critical elements, the call centroid and the put centroid. Call centroid is a solid green line, put centroid is a solid red line. And so, what is a centroid? It's a mathematical representation of the middle point of a distribution. So every 5 minutes, the vol M command plots these centroids, which again is effectively on a 5-minute basis. We aggregate total call volume, total put volume. We find that distribution, the middle point of that distribution, which is the centroid, and we plot that. So you can see here the solid green line, that's the call. So you can just imagine every 5 minutes we're plotting these centroids, and then we are connecting the lines for you to form these solid trends throughout the day, which again gives us very good visualizations into what speculation is doing for that day. And then in addition to the centroids, we also plot these dashed lines, which are called the lines of best fit. What these do is these take the centroid values from the open at any point into the current trading session, because remember this produces every 5 minutes. So say it's the open to noon. We have all this data displayed. We can understand, okay, if this is the trend of the centroids, then we can project out all things equal where that price is likely to headed. And then as we get more information for each subsequent 5 minutes, we update that line of best fit. So said another way, if we know how speculators have acted, transacted for the open through any specific period during the trading session, assuming all things equal, we can then logically project how those centroids will continue through the remainder of the session. And here is an example of that, right? So we have the centroids. This is from the open to 1 p.m. We have then the lines of best fit per projecting out. And again, this is showing a very choppy price action day. So hopefully you should see how those centroids visualize price action and how those lines of best fit can help us navigate the rest of the day. And, depending on what your style is, if you're a credit spread trader, you're an intraday future scalper, this is very informative to then identify our strategy and what our expectations should be for that day. And, not only times where price could go, but where price is likely not to go. To reinforce a key point, vol M is a measurement of market sentiment in the moment as reflected through volume traded by strike, which we then plot throughout the session via our centroids. It's important to note that vol M is not a predictor of price. However, we can utilize the lines of best fit as it's called out in the chart above. Remember these things? To show where price could finish, assuming the market continues to do what it has been doing in terms of transacting at specific strikes as measured by the centroids. The lines of best fit is a linear regression utilizing the 5-minute centroid values through the point in time. This line shifts throughout the session as centroid values change, something that we have covered. Assuming all things equal, if we know where spot price could finish the session, this knowledge could then be used to inform potential trade ideas. Said another way, if the market continues to trade in the same strikes it has been via the centroids, then we know the goalpost of where spot price could finish the session. However, as we said before, this is not the only use of vol M. Another key use of vol M is that it provides us an understanding as to the character of the trading session in terms of a chop day versus a trending day. We're going to go through each of those examples below. And just a quick pro tip, pay attention to the action of the cumulative tick via the market trend model and the cumulative and the vol M command. They often show, intraday confluence with each other, and we're going to get into examples below. So again, getting into those specific volume patterns, there are 4 key volume patterns that we look at when it comes to the centroids. The first is, the call centroid and the put centroid are both trending higher. Right, and what we see here is, the line of best fit trending higher, price action also trending higher. What this means, this is suggestive of a strong bullish momentum. Put speculators are likely closing positions as prices rise. Call speculators aggressively targeting higher and higher strikes. This typically produces a trend day higher, like we see above. So trading implications for you, prioritize long bias trades. Look for pullbacks to enter in a directional move. Avoid shorting against this strong trend. And again, going back to that pro tip, here is what the market trend model from that exact same day. We can see, strong linear update, filter tick buying as well, intraday volume action trending higher. So that is very informative in terms of an intraday basis, right? Because if you know the direction of the trend and you know where price is not headed, that is super, super useful. Going to the next signature. So here we have a put centroid that is relatively flat, but a call centroid that is decisively lower throughout the session. And so what this is suggestive of is, weakening bullish sentiment. Call speculators are becoming less aggressive. Put speculators that are maintaining position rather than pressing their advantage. And this also often produces sideways to lower price action. So here, trading implications, bias is slightly to the short side, expecting choppy range-bound markets. Really consider reducing position size to lower direction until we get better directional clarity. And right, the way you can think of this is we really shouldn't be expecting an impulse move higher because we're not seeing that speculation higher, but it kind of puts a lid on the downside move because we're not seeing that aggressiveness to the downside either. Next, we have a call centroid trending decisively lower, put centroid trending decisively lower. And right, this is the opposite of the first signature we saw, suggestive of strong bullish momentum lower. So, call speculators likely closing positions, put speculators aggressively targeting lower and lower strikes. And so, just as we were talking about strong bullish stays higher, strong bearish stays lower, prioritizing short bias trades, looking for bounces to enter in the direction of the trend, and avoid trying to catch the bottoms against the momentum. And then scenario 4, this is a flat call centroid, trending higher put centroid. So again, this characterizes weakening bearish sentiment, put speculators becoming less aggressive, call speculators maintaining position rather than pressing their advantage. So again, we're not expecting massive downside, but we're also not expecting massive upside because there's kind of a lid on the market because we're not seeing that call speculation expanding higher. So bias slightly to the long side of avoiding the chop or understanding that there is chop and helping that inform your strategy. If you're a credit spread trader, understanding above and below where you can sell those spreads, and vice versa, or even an intraday scalper, just understanding that your your kind of moves higher and lower should be shrunk in terms of how many points. If you're expecting normally to get 20, 25 points, maybe this is only a 10-point move. And then lastly, talking about those intraday reversals. In addition to those 4 states we just hit on, this can be incredibly useful for finding those intraday reversals. So, taking this specific example here, we can see that in the morning we are seeing kind of decisive movement lower, but then around 11 to noon, all of this started to trend higher, which also aligned with the cumulative tick filtered market trend model from this day. Again, we can see filter tick, kind of weak in the morning, and then really, we saw like a very aggressive linear update higher, started seeing some filter tick buying as well. So again, just that confluence is very helpful because if you're shorting, into the open and it's not working and we start to see that trend progress higher, then that's very informative to help you either stop shorting or to reverse your bias intraday. Can save you a lot of money, can also make you a lot of money. So quickly going over some volume rules of thumb. This is really just to extensive testing and observation on our part. Price respects centroids. So in general, price does not violate the centroids except occasionally at the very end of the trading session. Said another way, spot goes where transactions are occurring, or where targeting is occurring. Again, kind of in that same light, price follows speculation. So spot price tends to go where speculators are actively transacting. It rarely moves to levels to where there is no volume supporting that move. And then this tool is best reliable after 11:30. The London close option often marks where patterns become more reliable as the morning, positioning settles into clearer trends. So a couple FAQs for you. What does it mean when the lines of best fit are crossing, like the example below? So just to preface one thing, this generally only happens in the morning when we don't yet have, enough data points. And, having said that, with the examples that we've gone through and what we've discussed, you should be able to understand what is happening in this example below. looking at the centroids and how those are informing the line of best fit, just look how more aggressively lower the call centroid is relatively to the more modestly flat put centroid. So right, that just tells us likely calls are being closed a lot more aggressively than puts are being opened. So right now in this example, kind of sideways lower price action is what we should be expecting. Then second, what does it mean when centroids are above or below the lines of best fit? Using the call side as an example, if the centroids shift above the line of best fit, this tells us that the market intentions are moving higher away from where they have previously been. And then if they're below the line of best fit, this tells us that the market intentions are shifting lower from where they've previously been. So using this example, this is an example up here, just bear with me for a second. So this is the centroid, right? Before we saw the reversal, line of best fit would have been looking like this. But as we started to see this trend higher, then again, that's additional confirmation into the reversal saying, hey, the line of best fit was here, but now we're starting to get that centroids moving well above that, which is signaling, higher and higher and higher speculation. Can I use this volume analysis on single stocks and ETFs? We found it best just using it for SPX, 0DT, given that is where the majority of the volume transacts, as opposed to stocks and ETFs, which generally only offer weekly expirations. And then again, when is this command most informative? That'd be after the London close, which is 11:30 Eastern Standard Time. So now summing up the lesson for today, throughout the progression of Vol U, Vol D, and ultimately Vol M, we've developed a comprehensive system for understanding market sentiment in real time. Unlike conventional technical analysis that relies on lagging price patterns, our intraday volume tools let you see where option speculators are focusing their activity, giving you an understanding of the likely character of price action between choppy and trending, potential price targets based on speculator positioning, early warning signs of sentiment shift. And then, this also kind of helps you give you confirmation of technical signals through what's happening under the hood. By combining these tools with a market trend model, you create a powerful system for identifying high probability trade setups while avoiding low probability environments for your trading system. So action steps of how you can literally implement this in tomorrow's trading session. Run these commands throughout the day. Just so you can see here, like we have channels in our Discord that automatically produce these volume charts every 5 minutes, so it does the work for you. Second, once you run the command, look for the key patterns that we discussed above. Are both centroids trending higher? Could be bullish momentum. Are both trending lower? Could be bearish momentum. Or are they converging, which is kind of a signature of choppy conditions? And then combine that with the market trend model. Make sure that your trades are aligned with both the cumulative tick and the direction of the centroids. And yeah, kind of all that I got to say about that. So by adding volume analysis to your trading toolkit, you'll gain a significant edge in understanding market sentiment that most traders never see. Remember, price is the last thing to change. By tracking options volume, you see where the smart money is positioning before the move appears on the price chart. So with that, appreciate the time. Let us know in the comments in the description if you find this useful and how you have implemented it into your trading. And again, all right, we do our best to cover everything in this article, but if it's still not clear, then again, let us know. You can email us. We're very public of the ways that you can reach us on Twitter, email, in the Discord. So again, if you need additional help, just let us know. But with that, we appreciate your time. Thank you.